What's the difference between an FHA loan and a conventional loan? It's a great question, and I see it constantly on Reddit. What concerns me about the question isn't the question itself, but why people feel like they need to figure it out on their own. So let's walk through this clearly, without hype, without fear, and without pushing you into the wrong loan type. An FHA loan is insured by the Federal Housing Administration. That insurance allows more flexibility, especially with credit and minimum down payment. An FHA loan allows a minimum down payment of just 3.5% of the sales price. And you do not have to be a first-time home buyer. That's a big misconception out there. FHA loans do include mortgage insurance, and it works differently than conventional loans. There's an upfront amount, which is 1.75% of the base loan amount, and that amount can be financed into the loan. You do not have to bring that out of pocket. There's also a monthly mortgage insurance, and this is the important part. The FHA mortgage insurance is a set percentage based on your down payment, not your credit score. That predictability is one reason FHA can be a strong option for many buyers. Conventional loans. A conventional loan is backed by Fannie Mae or Freddie Mac, which guarantees the loan and has set underwriting guidelines. The minimum down payment is typically 5% or 3% if at least one of the buyers is a first-time home buyer. The mortgage insurance is very different from FHA. It's risk-based, meaning that it depends on your credit score, the minimum down payment, how much debt you have compared to your income. And then, of course, whether you've owned a home in the last 3 years and you're only putting 3% down. So two people buying the same house can have varying monthly mortgage insurance. There's a lot of fear that comes in determining loan type. You'll often read online, don't get an FHA loan if you qualify for a conventional. And that's a blanket statement, and it's not necessarily correct. Yes, if you put a minimum down on an FHA loan, the mortgage insurance stays the same on the loan unless you put up to 10%. But here's the real life part that many people forget. Most people don't keep their same mortgage for 30 years. They refinance, they move, they buy a different home. Most homeowners keep the same mortgage about 3 to 7 year range historically. So while that fear sounds big online, it doesn't really play out for most real life situations. Another difference is the interest rate. FHA loans often have a lower interest rate than a conventional loan. And in many cases, that lower rate can make FHA a better option, even for buyers with good credit or putting 10% down. There's also a difference in the property condition. Because FHA loans are federally insured, they tend to be stricter about the condition of the home. And so conventional loans are usually more flexible. So again, different situations, different loan types are better. So when you ask, what's the difference between an FHA loan and a conventional loan, what you're really asking is, which one is right for me? And the answer depends on your income, your debt, your credit, your savings, your goals, your timeline for being in that mortgage, and the house that you're actually buying. I'm Suzanne Cupit with Vessel Mortgage. Please don't let the internet, AI, or a well-meaning friend or family member decide your mortgage. Let's look at your situation and give you the facts. No pressure, no rush. We're here to walk you through along that path, no matter how long it takes. If this was helpful, subscribe, comment, or reach out when you're ready to talk and get the real answers for you. You don't have to figure this out on your own.